at Metropole TVKE across all your social media platforms. 20146. That's your SMS line. My name is Simba Elijah Charles. We're straight into our economic review this morning. All right, let's therefore introduce the guest panel that we have today that is really going to take us throughout the next few minutes as we tell you exactly what it is that you are waking up to this morning. This morning, we're joined by Abraham Madago, the CEO Miwadi Capital. We are also joined by Joan Maneke, who is an economic analyst. Arnold Ngusale is a microfinance banker, and Peter Minga was an economic analyst. All right, let's therefore introduce to you what we have for you this morning. Now, turbulent 2020 has seen a record number of profit warnings from commercial banks in the country, which might now risk investors missing out on a 33 billion shillings worth of dividend after the lenders were pushed to cut or suspend payments in a move geared to conserving cash in the wake of the COVID-19 crisis. In what has been a tough operating environment for the 6 of the 11 Nairobi Securities Exchange NSA listed banks, which has seen their profits fall by more than a quarter, which has compounded a bleak dividends outlook. Now, the freeze on the dividend payouts will now see investors miss about 33 billion going by the 2019 payouts, or of 40.47 billion that was paid in the previous year. Question this morning: is this situation likely to continue into 2021, and what are the current indicators that the industry's chances in 2021? Another one that we have to think about is what sort of regulatory based response do we expect in 2021 should this situation prevail? Abraham, let me just speak it with you this morning. I mean, 33 billion worth of dividends might not actually get to the investors this year if you are in the banking industry. Do we expect that situation to correct in 2021?
First and foremost, what's a dividend? A dividend is paid out, is a portion of profit.
Yes.
To which the directors and shareholders apportion to themselves.
Yes.
The Companies Act is very clear. That can range from 0 to 100% of the profit.
Yes.
After you've taken out everything. Secondly, there is no compulsion to pay dividends. So really, I hear this argument that they're going to miss out. That is the nature of dividends. You pay in good times, and bad times you don't pay. Now we're in absolutely not very good times. So yes, the question to whether the trend will continue in 2021 is when it will really hit home.
Yes.
Because now 2020 was half pandemic, half non-pandemic.
Yes.
This one now will be a full, and don't forget, this is when now all the impact will settle.
Yes.
Remember, banks is where it all comes home. When everybody fails, they stop paying their debt. When they can't pay their debt, then the banks start struggling. And that is what is happening now, because now we've given them breaks, we've rescheduled, but those are short-term measures. The long-term measure of any debt is to get it paid. Either you get it paid, or you take a hit on it and you take it off your books.
Yes.
So I think for any bank now, prudence will dictate that they conserve as much cash as they can.
Yes. And
also with it capital, because don't forget, when you're paying dividend, you're paying out part of your capital.
Yes.
What would have actually gone into your capital? So for any bank, I would expect nearly everybody, not just bank. Okay, banks, we're talking about banks here, but even in the corporates, the big corporates, to conserve the capital, because this will be the year when the real shocks will set in. So the strong will survive, the weak will perish. So everybody having gone through school for the whole of last year and seen how unpredictable this thing can be.
Yes.
The only saving grace is then you stock up. You stock up. That means you keep as much as you can, and you pay as little as you can. So I think everybody's going in that strategy. So do we expect that to continue? Probably yes.
Yes.
Until this fear goes away.
Pretty much. Arnold, let me bring you in as well. Do you expect that this is going to continue in a 2021 as Abraham is forecasting?
Yeah, I think 2021 is what you call a curveball as far as economics is concerned. I think 2020 was essentially a learning curve as far as business is concerned in the event of an unexpected event. And most financial institutions have essentially learned how to deal with unexpected events. I think it will be a year whereby banks will be very coy as far as lending is concerned, but at the same time, opportunities are abound.
Yes.
The CBK has projected about 5.4% increase in GDP. Well, actually 6.4. World Bank is about 5.7% increase in their projections. So there are certain industries which are likely to perform once we get to the tail end of what COVID-19 has done to the economy.
Yes.
However, it's going to be a tricky year. It's going to be a year whereby banks need to probably look at the value chain of the customers that they're dealing with and essentially customize solutions to fit in those particular value chains.
Pretty
But
much.
It's going to be a tricky year,
Yes.
but opportunities are still there.
All right. Now, gentlemen, you're saying that situation is going to continue again in 2021. Now, Abraham, from a regulatory perspective, I know the big man at CBK is watching that and saying, well, banks didn't pay last year. They might not pay this year as well. From a regulatory perspective, what do we expect to be pushed into the industry?
As far as CBK is concerned,
yes.
CBK has no input on in terms of your dividend payout,
yes.
because that is purely governed by the companies.
Won't the banks be knocking on his door and saying, well, you gotta do something that's going to favor us, at least run our business the way we ought to and pay?
You see, what he has done,
yes.
he has tried as much as possible through the MPC to stabilize the macroeconomic environment.
Yes.
And that's all they need. Because once your environment is stable, then it's up to you to come up with your individual strategies.
Yes.
Because from a regulatory perspective, what action can the regulator take to cure an external whatever is going on? All he can do is to ensure that there's continued fair play and the customer, because the CBK is there for the customer. The CBK is not there for the bank. That's why they regulate the bank on your behalf.
Yes.
To make sure that you're taken care of as much as possible, but not to the detriment of the bank.
Okay.
That's why you're seeing they were giving moratoriums, they were giving breaks, but those will run out. The ultimate is that through fiscal and monetary policies, the economy has to either develop good shocks or come up. But in terms of whether CBK has input in the dividend process, I don't think so.
Pretty much. All right, Arnold, anything that we expect again from a regulatory perspective from the regulator, or you have the same stance as Abraham this morning?
More or less the same stance. They've been assisting the market by a low interbank rate.
Yes.
At the same time, the governor mentioned something to do with a credit guarantee of about 100 billion, just to try and create credit availability in the market.
Yes.
So the CBK is likely to intervene more and more as far as the market is concerned, and essentially also to try and assist the clients, the customers.
Pretty much. All right, gentlemen, I beg that we move on to the next one, where KCB's foreigner stake has been cut to a new low of 14.08% in the wake of COVID-19 pandemic as they moved to safe havens. Now, foreign investors who now account for 452.297 million shares is in sharp contrast with the 19.09% in March last year, when they held 29.25% stake in the lender. Now, according to the latest regulatory filings, foreigners have sold 161.18 million shares between March and November last year, valued at about 6.17 billion when calculated by KCB's current share price of 38 shillings. Now, local individuals and institutions have in turn snapped up most of the shares left by the foreigners, with the data now indicating the local investment has jumped to a high of 66.17% as at the end of November 2020. Let me bring in you, Joanna, on this as well this morning. What does this investor profile mean for the lender, or should we not just talk about it?
Okay, I think in terms of the fact that that local investors have taken up KCB shares.
Yes.
I want to believe that it's because it's an attractive share for investors out there. That's why they've jumped in and taken up what the foreigners have not understood about it.
Yes.
So for me, I think it's a plus for KCB. It means that in the eyes of the local investor, KCB is an attractive investment, and we have people looking at understanding our environment better within. business environment and the political environment, anything that entails our environment, and therefore picking up attractive shares. So for me, I think that this is looking good for KCB, that it's still an attractive share to pick and run with for local investors.
Pretty much. Let me bring in Peter Amunga on that as well. Peter Amunga, despite what Joanne is saying, well, we have to look at exactly how international investors have been running away from this lender. I mean, you would like to think that when it comes to the strongest quarters of our market, then the likes of KCBs, the likes of equities, the likes of Safaricom's would give any other person, whether foreign or local, that confidence that your money is going to give you something out of that. Should we read something into the foreign investor exit from the lender?
In fact, I wish to differ with Joanne.
Yes.
When Joanne says that that looks good and it's attractive, it means it's attractive. To me, it doesn't mean it's attractive.
Yes.
Because all our major companies, even when you go to the London Stock Exchange, the Tokyo Stock Exchange, most of the shares owned in those countries are owned by foreigners. The big companies, the foreigners are the ones who have big stakes in those shares.
Yes.
Now, coming to Kenya, you look at Safaricom. The foreign investors like Vodafone and the rest are the biggest investors in Safaricom. We locals get more confidence, even to, for the share to be more attractive when foreigners and other people are attracted to it. Now, when we see them running away, when we see them selling their shares, then there is cause for worry. There is a question that we need to ask ourselves: why? Why are foreigners selling their shares? Why are foreigners relocating their businesses from Nairobi and from Kenya? There must be something happening, or we are doing that's not right. To me, it's an indication that something is not right. And the Ministry of Finance needs to tell us, why are foreigners running away? Why are some even relocating to Rwanda, to Tanzania, to Dar es Salaam? There must be something. And KCB has been one of our best as Kenyans. Actually, to me, it's like an indigenous company. It's one of us. But we need foreigners to inject their money in these shares, to invest in KCB, for everyone else to be confident that things are right. When they start running away, there's a question mark, there's worry coming in.
Yes. All right. Arnold, I want to come to you on that before I cross over to Abraham and Joanne. Get ready, because I want you to get back to exactly what Amunga is saying. Arnold, well, I mean, they're selling and they're getting bought. I mean, should we talk about it? Arnold, what are we talking about? I'm trying to understand.
I'm an optimist, and I'm with John here.
Yes.
I think KCB is a top stock.
Yes.
And if you look at what happened last year, as much as the business environment was not so good, KCB went out and acquired another bank in Rwanda,
yes,
essentially increasing their asset base. So it simply means in the long term, KCB is going to be having a bigger asset base, essentially going to be making more money, which will mean more dividends as far as investors are concerned. And remember, the investment game is a game of patience. So sometimes things may not go the right way, but at the same time, you need to hold on. When you have a top stock, you don't necessarily need to sell. And as far as foreign investors are concerned, it's a cycle. Foreign investors will always come and go, depending on what the economic environment looks like.
Yes.
Kenya is an emerging market. The projection for 2021 is a positive projection as far as resumption of normal business is concerned. We have some disbursements which are coming in from IMF, which are going to also boost the economy. So as far as I'm concerned, I think KCB is still a top stock. And I think KCB will definitely recover. And the guys who will be holding that stock will definitely make good returns.
Pretty much. Joanne, just before I cross over to Abraham, I want you to come in on that as well, because Amunga is saying, I mean, when you see foreign investors exiting from a top stock, which we're all agreeing KCB, then we have to ask ourselves a question. I mean, everybody does know that the market sentiment across the world has been affected by the coronavirus pandemic. So in one way or another, if it was about staying, then what we could not expect people to run away from was a top stock like KCB in the country. Is that another area that has a smaller talking point, if you consider that the shares that they're selling are also getting bought?
I I want to correct Amunga a little bit that Kenya is an emerging market. So foreigners are choosing to invest where they understand in this season.
Yes.
So to counter their risks and to mitigate what they don't understand. So it should be prudent for them to invest within the markets that they understand and not new and emerging markets.
Yes.
So it's expected that they would, of course, cut back on their investment based on the COVID and what's happening within. So in terms of the fact that the stocks are being taken up in Kenya within our market, where people understand what is happening, for me, it's a plus. So if it was not being taken up, that would be a different issue. So I still believe that it's still a top. I mean, it's a top share, and that looking forward, things will gradually progress well. Yeah.
Pretty much, Abraham closed that conversation this morning. I mean, yes, now we could celebrate. The local investment is at 66%. That's the largest that's ever been. And if you look at the profiles of most companies, then you're going to find that, wow, it's among the leading when you go to, when you look at that investor profile. When you talk about local investment vis-a-vis international investment, is that talking point there?
You see, if you look at this, I've had the lady and the two gentlemen.
Yes.
And they all have taken different positions.
Yes.
But if you look at this thing sequentially, pre-COVID, KCB was, all was well, all was going well.
Yes.
So then COVID came. Now, when COVID came, everybody went into panic. The people who started exiting were the local people. Then the foreign people followed.
Yes.
To me, this exit is driven more by their desire for liquidity by the investor than what KCB is all about.
Yes.
So this is just an asset class that they can cash. So it has little to do with whether KCB is performing or not performing.
Yes.
So this is not a dipstick of KCB's performance. It is a reality that people need, investors, even at that level, are in need of liquid. And remember, we talked about just a bit earlier, that everybody is trying to stock up. So even the investors, they're trying to mop up whatever liquidity they can around the world.
Yes.
Now, why? Of course, as they are selling, somebody has to buy. So that's why they exited. So the Kenyans are the ones that buy. Why are the Kenyans buying? Because in this COVID cycle, there's an information, we go through an information cycle. Now, the Kenyans now have started understanding how this COVID is impacting them economically.
Yes.
Especially the people who are economic savvy. So they've already been able to understand and taken a horizon on the KCB share.
Yes.
That's why they're able to stock it up. Then what will follow now, once it settles out there, they'll be back. They'll come and they'll buy. But to me, this has nothing to do with KCB's performance. KCB is a stable bank. I don't think we need to even debate that.
Yes.
It has to do everything to do with the fact that they could actually cash it, that it was a good stock, they had good money, and they could get a gain. And it was about liquidity, and while they were looking for liquidity, they made a capital gain while they were at it.
Yes.
So overall, yes, it is a normal cycle. COVID came, locals exited, then foreigners followed and sold to the people who are now coming back, and then they'll come back, and then it will be full cycle.
Pretty much. All right, let's move on to the next one. Peter Munga, be ready, because I wanted to jump in on that. Now, charges against former Treasury Principal Secretary Kamau Thuge have been dropped, which will now see him turn into a state witness against his former boss, Henry Rotich, over the Kimarere and Abor Dam scandals. Mr. Haji, who also withdrew charges against former Tourism and Wildlife PS Dr. Susan Koech, indicated that the two will be state witnesses in the trial of former Treasury Cabinet Secretary Rotich, other state officials and directors of an Italian company implicated in the scam. They were facing multiple counts in connection to the procurement process for the construction of the two dams in Elgeyo Marakwet County. They were all accused of jointly conspiring to defraud the government of 501,829,769 by entering into a deal to construct the two dams without approval. They allegedly committed the offense between December 17th, 2014 and January 31st, 2019. Last year, the DPP dropped charges against two Treasury officials, Bernard Gibet and Livingstone Bumbe. All right. This is an ongoing case. For us to be safe, Peter Munga, I'm going to ask you exactly what you think this would mean to the corruption charges that we've seen in this country, and whether indeed this sounds as progress in this case.
Actually, it is just disappointing. Just even following how we have been conversing this morning, Kenyans, we live by faith. There's this kind of thing that we just believe. We are so optimistic. It's like,
Yes.
like COVID only affects Kenya, but it's an international thing. Now, the dropping of charges and making Thuge and Sarah Koech to be state witnesses, already that is something to tell us that there must be some horse trading going on. It means also that the DCI, by the time they brought up charges against the former Minister for Finance, they were not ready. I expected they had all the files ready. They had all the evidences ready. The case should have already been going on for this time already. Somebody should have already been convicted even. But you see, late in the case, 2 years or 1 year after they arrested Koech, the former finance minister.
Yes.
And now they are still looking for witnesses. They are still making some of the people who had been accused to be state witnesses. To me, it means that the DCI, the investigators, are not ready. Something is not right. It means they didn't have enough information. And it is taking a political angle. Obviously, I want to tell you this, all of us who are listening, this is national television. This is going to take a political angle. Like all corruption cases that we have seen in this country, sooner or later, the charges against Mr. Rotich, Henry Rotich, the finance minister, will be dropped because they'll say there's no evidence. The moment you start seeing this kind of things, you know things are not right. Somebody didn't do his homework. Somebody's sleeping on the job. And that is why foreign investors are even selling their shares from things like KCB, because they're not confident with our investigating officers. They're not confident with our economic policies. They're not confident with so many things. And that is what the problem and the disconnect is in this country.
All right, Joan, let me bring you in because I want Abraham and Arnold to actually also weigh in on this. Joan, do you think that this is a proper move, generally, therefore, not essentially about this case, that yes, we could be making progress in, and I want to point you out to this, Joan, high-profile corruption cases in the country. Do you think that this recent development in this case could be something that we can count on as a proper step in the right direction?
Okay, I'd like to take a different thinking.
Yes.
As opposed to Amunga, in terms of that I think it is in the DPP's interest to prosecute and bring to conclusion,
yes,
or to resolve conclusion such kind of cases.
Yes.
So in the way that there's a different now angle to which he has taken to get the case to move forward, I believe that it's in he's doing it in his interest to make sure that there is that this it seemed to be a move that is going to take the case far, as opposed to stalling it. And therefore, for me, it's in his interest to have the case moving forward and to bring it to a reasonable, not end or conclusion, but to a reasonable, what do you call it, perspective in a public view.
Yes.
So I think I'll differ with Amunga and say that the DPP is making a right move.
Yes.
We don't know in the long run how that will impact the case, but
yes,
in terms of he has an interest to see that the case moves forward and there's sort of some closure looking forward. Yeah,
pretty much. I'm going to come back to you because I need you to react to that. Now, Abraham, I mean, you and I know a lot of profile cases, high-profile cases, and especially corruption cases that have dogged this country that nobody knows whether they're concluded or not. Is this another example? And would you say that this is a new development that will probably lead to the right direction?
I checked.
Yes.
I studied economics.
Yes, Peter, just shortly, let Abraham react and then I'll come back to you as well.
I'm just saying that the last time I checked, my study was in economics.
Yes.
and not law. And therefore, that's for one.
Yes.
One. And two,
Yes.
Henry was just 2 years ahead of me at the university.
Yes.
So other people I know. So personally, I would not want to comment on any of this. Because personally, it's an area I know very little about.
Generally,
so, yes.
Would you say that?
But,
what
but
is your,
now,
what's your confidence in the way we handle high-profile cases?
But generally speaking,
yes,
it is in the purview of DPP to do as he wishes.
Yes.
To get wherever he needs to go, because
yes,
that is his constitutional mandate.
Yes.
How he drives, who he draws, who he charges, that is the discretion given to him by law, by the Constitution.
Yes.
So it would make little sense for us to debate that discretion.
Yes.
So the most important thing here is the message that we want to send to the rest of the people who intend to do such things in the future, because all these allegations, until somebody is convicted, they are innocent.
Yes.
So that's very important.
Yes.
But the most important thing is that we need to show that there's rule of law, and it works for both ends, the accused and the accuser. Number two, that that the rule of law can be a deterrent to economic sabotage and economic corruption.
Yes.
That's the message that needs to be sent.
Yes.
But with fairness, that we only convict those who are guilty and acquit those that are innocent.
Pretty much. All right, Amanga, I want you to react to that just before we take a short break, and then bring in Arnold to just help us clear that conversation after we come from the break. Amanga, would you say that we've made progress in the way that we handle high-profile corruption cases in this country? And I want to take you back to when the Jubilee government came into power. Would you say that there has been some sort of progress in the way in which we settle these high-profile corruption cases in this country?
Actually, I can say without a doubt that there is no confidence. Nobody, even investors, even my brother and sisters who are seated with me on this panel,
yes,
we can't say that we can't want to debate this. It is what causes the stability of our shilling, or the confidence that investors can have in us as a country when we are able to deal with things like corruption. I want to give a very good example. I was in the Ministry of Education when the issue of the chicken gate scandal came up, whereby some Britons were accused of having colluded with people at the Kenya National Examination Council to defraud the government. And the British authorities were able to conclude the case within a few months. Those guys are actually already serving jail sentences right now. But I want to tell you, the guys who were involved in Kenya that time, it was 2013, today is 2021, none of them has been convicted. They retired from their jobs. Some of them even got promotions and went back to their jobs. Now, that is what causes fear in the markets, that we think the government is making progress in the fight against corruption, then reaches somewhere, the person who was arrested, like I can say without any shadow of doubt, that a PS in the Ministry of Finance cannot claim that he's not aware of those dealings that happened in Komaror Dam and Aror Dam. He must have known something. He must also carry some responsibility. Now, when you see the government make it a media issue, they bring it into the newspapers, we start reading about it, then you can know that politics is at play, and this corruption case will just go down the drain like all others. And the problem is, it kills the confidence of people in our economy. That's why we are seeing our shilling devaluing. That's why we are seeing investors pulling out of their shares from the KCB. And that's why we see our industries going down, because there's no confidence that the rule of law, that those who steal from the public coffers will face the full force of the law. That's my take.
Pretty much. We take a short break here on a business, and once we come back, let's talk about another way in which we're starting 2021. Government in business, yes, it's fully marching it. Let's talk about what is happening in the sugar industry right now and ask the question, is privatization the way to go for the government in any of their non-performing, loss-making agencies? Once we come back.